All right, we're good to go. Happy Friday, everybody. Tesla stock down 1.6%. Overall markets, Dow Jones up 0.7%. I believe there's a bit of a increase in Salesforce stock. Maybe that's why. Dow Jones on this is only 30 stocks, so one stock can move things quite a bit. Nasdaq down 1.2%, S&P 500 down 0.3%, Russell 2000 flat. Tech companies are generally down today. Microsoft, Nvidia, Meta, all down 2%. All chip stocks are down. I asked a couple of bears to come up early so we can discuss maybe some of the concerns they have. Magic, how are you?
Good. How's it going?
Why isn't? Hold on 1 second. Can you speak again?
Hey,
Okay.
how's it going?
Yeah, so much better. Okay, great. So generally your so you do you okay, let me just kind of ask you straight. Do you think gross margin will be negative in Q2?
I think that's more of a general question. I think for the cars that they are selling under this promotion of 0.99%, I think the margins are 0 or negative. They're very close.
Okay. I'm going to pin this specific post, number 74. So this is the table that you believe Zero Sum Bond came up with. Interestingly, leases financing the last effort to raise deliveries. Tesla has introduced a low interest offers for its Model Y. The cost of the promotion is evidently long-term loss making in order to drive short-term deliveries kicking the can. Okay. Is he here?
Not sure if he's here, but I think I understand it. So if you want to ask me questions about it,
Yeah.
try to get him on.
Okay. So if I look at the implied discount, okay. First of all, these FICO scores are estimated, correct?
This was pulled from the website.
Okay. But we don't really know if somebody has, for example, less than 640, they qualify for this program, right?
Yeah, we're not sure there. That's what I'm saying. I don't know. I don't know what the take rate is for if it's 640, do they still get the rate, or depending like what their credit rate is. So I'm not sure.
Right. So I guess so if I asked either Zero Sum or you, how many cars do you think will be delivered under this program with subvented loan rates in Q2? You wouldn't. I mean, we wouldn't even know where to start to estimate that number, right?
Yeah, so I'm not sure what the mix is, but my point in bringing this up is that you wouldn't necessarily want to bring, even if it's 10%, you wouldn't want to sell a car at 0 to negative margins, even if it's 10%. You can call that immaterial, but it's still a bad sign. So I don't know what the mix is. I don't know how many. I don't know the credit score, but even at decent credit, let's say the middle, let's say 700 credit score, right, or 640 to 700. That's still a discount of 20% on that.
20%. Let's see. Okay, so you're saying even if it's 700 score, $9,000 for 60 months.
Yeah, so I'm just going off, 60 months is the standard. So I'm just saying, if you have a FICO score of 680 to 720, which I think let's give everybody the benefit of the doubt. That's typically Tesla owners are probably going to have better credit score. Finance for 60 months, that's about 20%. So I think that's pretty being conservative.
What's the I mean, that 9,000 estimates looks pretty, it's too high, I think. So I would want to see, so maybe we can ask him to kind of produce that $9,000 math behind it. Is there a formula behind that cell?
Yeah. So essentially, what you have to do, the way that you get there is you have to search for payments. You know how like the future value calculator, the finance calculator,
Mm-hmm.
Gammon? Okay. So firstly, this is how you do it. So you get a finance calculator, you put in the payments, you put in the market interest rate, which is 7-8%, right? Well, actually, sorry, you calculate payments first. You get the you say you get the prevailing interest rate, you get the present value, and then you discount it, and that's how you get the payments. Now, what you do is with that payment value, okay, with all right, sorry, then you get pretty much payments. Now, what you do is you recalculate the present value based on, you change the interest rate, right? Once you change the interest rate, the difference between where it should be and what you're paying is what you're going to get. And that's where you can get the 9,000. If you have a financial calculator, I can run you through the calculation right now, or on Excel.
No, I got you. Um, I have to think about that a little bit more, but I'll reach out to you guys separately for the formula of that cell. But I generally understand what you're saying. You also have to obviously incorporate um, the the um, the upfront payment into that calculation as well. So
Yeah, no, of course. I mean, we can even assume you can take a few 1 or 2 thousand off of that if you want to talk about. We made some assumptions in terms of the principal that was financed, all that. I mean, we can play around with it, but this is not an exact number. This is a range, right? That we're just trying
mhm.
to come up with a range.
And then the other thing I want to point out is in Q1, pretty much all new inventory was sold at a deep discount. Like we're talking, with all the various types of discounts that Tesla did in Q1 and the incentives, you're talking five to $10,000 for all deliveries. Whereas these subvented rates apply to, I think, a smaller portion of deliveries in Q2. So that's why I think my general rule of thumb, without going all the calculations, is the amount of discount from Q1 to Q2 should be similar. That's why I just don't see how you can get to even a 0% margin or even less than 10% gross margin.
I mean, potentially. I mean, can you provide the information on the discount so we can
In
compare it
Q1,
and we can get
yeah. I actually wrote an article on this both on Patreon and on Seeking Alpha in Q1. While Bill Bob Joe talks, I can pull it up. Bill Bob Joe?
Yeah, question for the Magic Berry Peddler. So when Tesla buys down these interest rates, I don't know, is that an expense that they're going to report all on their Q2 earnings report, or are they going to spread, those costs over the life of the loan, and that could be 5 or 6 years? And if that's the case, it's going to be a very small amount. It's 15% of vehicles sold, and you're spreading those loan buy downs over the life of the loan. I think that would be pretty negligible on the earnings report.
Yeah, so it depends. It depends if they're going to do financing in house. This is assuming that, let's say, Wells Fargo or another third party were to provide the financing. So if Wells Fargo comes in, they have to take the bite. You have to take the hit up front because Wells Fargo is not going to let you finance something. So if like the discount, the implied discount is going to be Wells Fargo, instead of cutting you a check for 40 grand, they cut you a check for 32, and they take on the credit risk. They take on the payment risk. So that's what I'm saying. What you're doing is it's a little convoluted, but what you're doing is you're hiding the discount in the financing, right? That's kind of what you're doing.
Yeah, I understand that. So what I'm saying is, even if Tesla pays, cash to buy down these loans up front, for non-GAAP accounting purposes, couldn't they just spread that out over many quarters?
Maybe for non-GAAP, but essentially you're still receiving less for the car, right? I mean, it's going to be just like small. You're receiving 32 instead of 40, so you can, it depends how they account. The economics of it is not great. So maybe they can, capitalize it and release it, but economically, it's not a fantastic thing.
Yeah, good point, Bill Bob Joe. We don't yet know how exactly the accounting is going to be handled because we don't know the specifics of this program. And we're going to find out more in the coming quarters. I think that Tesla will ramp the financing arm over time, gradually. And the impact on Q2, I don't think is going to be huge. Whereas impact of all the various incentives that I'm about to pin up here in Q1 was widespread and very material. So, like, that's another reason why I think, we shouldn't jump to conclusions with this. But here is magic. Here is the list I pinned at the top. You can read that while Cody talks.
Thanks. Yeah, the issue I have with this analysis is it's from the consumer side perspective on the cost analysis of what they would borrow outside of this program, as opposed to, but we're applying it to the effect of the discount on potentially Tesla's balance sheet. Whereas Tesla, however they finance this, arguably can fund. They have a much lower cost of capital than your typical consumer at a 700 credit score would be. So I think the analysis is a little misleading from that perspective.
Yeah, I mean, we don't know if they finance it in-house and you're saying they have a lower cost of capital. Well, that's very negative cash flow, right? Because they take on the cash risk. They have to collect, instead of $800 a month, they have to collect $700 a month. So they have a receivable, right? They give you the car and they have a receivable. So that's just very negative to cash. So again, either way, either with it in the cash or in the, either way, you're receiving less for the car, no matter how you chop it.
Yeah, no,
Yeah.
there's no
Well,
question.
but not necessarily less from Q1. But definitely less from what you would receive if you didn't have to resort to subvented rates or discounts, obviously. So the list I provided, this article was published on March 5th, and I published subsequent articles on Patreon on the same topic about the new inventory discounts. And you can see here, demo cars had up to $5,000 off. There was a $1,000 off on new Model Y, S, or X for Cybertruck reservation holders. There was 3 months of free FSD subscription with a referral link. 5,000 free supercharger miles, which then increased to 10,000 in a subsequent round. Lower release rates. China had incentives around insurance and everything. So I say at the bottom of that 6-point bullet point, I estimate the monetary value of Tesla's historic incentives amounts to about $10,000 or 10% to 20% off the list price displayed on the order page. So if you go to the zero sums thing and you said, depending on the financing length, the implied discount, the credit score, etc., that again is 10 to 20%. So, which is, so now do you agree with me? Because all of those new inventory discounts are gone, right?
So I need to review it, but it shows that it says 5,000. I'm not sure where the 10,000 is coming
Well,
from.
that's just the first one. That's just the first bullet point. And then there's other programs that, if you kind of do the back of the envelope calculation on the other ones with the insurance discounts and the $1,000 discount for Cybertruck reservations and the supercharger miles, which then went up to $10,000, 10,000 free miles and everything, that comes to about $5,000 to $10,000. So general rule of thumb, Tesla moved from offering these new inventory discounts, various discounts, to providing a subvented loan rate for some portion of the deliveries, whereas the new inventory discounts were pretty much for everybody, available to all. So, I don't think you're going to get the. I mean, we can make a copy bet on this again if you want. I don't think you're going to get the drop in gross margin you're looking for quarter over quarter. What do you think will be the gross margin for Q2?
again, this is I'm not sure about the aggregate gross margin. I'm just saying for these transactions, I think it's dilutive to gross margins. That's what I'm saying. I don't know if it's going to be 17 to 12. You would have to figure out what the mix is, right? And that's, let's just say, I mean, okay, there's some assumptions there. Like I'm looking at the list about how the discounts are. Like I don't want to count superchargers, or I don't want to count reservations. I just want to count straight cash. So if we agree it's 5,000, right? If we let's just be on the lower end, 5,000. And what I'm showing
you have to account for this, right? And Tesla does account for those supercharger miles when they deliver the car.
Who values the supercharger miles, right? Like,
I mean, Tesla has to account for it, for that incentive. When they deliver the car, it has to appear on the income statement somewhere. The value of it.
We can agree to disagree about what the value is, but again, you can say it's close. But let's say that's somebody with a perfect credit score at that rate. Now I have to go look and see and make sure that these discounts were reversed. And if that's the case, then you can. We're just trying to see what comparatively did they increase the price cuts versus last quarter. That's really the question to arrive at.
Yeah.
So
yeah,
that we need to compare that to what you're saying, and if the numbers pan out, I'll agree. But I'm not sure. I need to just check. But
okay, good.
Yeah, but from the standpoint of, let's say if we find out that Tesla is financing somebody at 640 credit score for 60-month and above, all of those buyers are getting a bigger discount on the product.
Yeah, sure. Of course.
So we need to know how loose their credit lending is here to see if there's going to be a difference. So I'm not sure. I mean, that's speculative, but I'm just saying from a standpoint of, even in a good situation, it's about $9,000 all in, what that discount's going to be. So, right, like we have to account for that. But we'll take a look, and I mean, look, I'll take a look at the numbers.
If you see any evidence of Tesla financing somebody with a 600 or lower, like a poor credit score at 0.99 or 1.99, you let me know.
Okay, sounds fair.
All right. Machine?
I think the big picture is that the used car market is indicating that prices have stabilized in the last month or two. So I expect slightly lower overall prices for Tesla versus Q1, because there has been still some decline. But I don't think it makes any sense to think that there's been some massive drop and financing. So I just don't see that big picture why we would think all of a sudden they need huge price cuts to afford for this quarter. So my guess is the margins will be a bit lower this quarter.
What is up with your connection for 2 days in a row? Cody, can you hear him?
Yeah, it was in and out a little bit. Yeah.
Yeah, Machine, your connection is horrible. Yeah, it's really bad. Sorry. Gonna move you to listener. But I think he said something like used car prices, resale prices, Tesla has been stabilized in the last month or two. So he's assuming that demand is stable in the last couple of months. So there's really no need for Tesla to be offering massive discounts or finance. Like, I guess maybe what he meant was there's no need for Tesla to be financing these like poor credit. And I agree with that. I think these subvented loan rates are going to be limited for now to kind of prime borrowers, but something to keep an eye on.
Just a question about their motivation. It's probably come up, but I haven't been on the space for a while. Do we think that they're maybe flushing through existing Model Y inventory ahead of potentially retooling a refresh to Model Y or something related? It seems like that would make sense to me.
Yeah, I mean, for whatever the reason, like all of these new emitter discounts, subvented loan rates, free supercharger miles are to increase demand than what you would get otherwise. Okay. I mean, Magic is right in the sense that as a Tesla investor, You don't want Tesla to have to do these things. You want Tesla to have to, be able to sell these cars at a higher price, higher margin, etc. So, we know from Troy's data that Tesla came into the quarter with a pretty heavy inventory level. Still, on a days of supply basis, better than any other automaker in the world, including Toyota. But historically higher level for Tesla itself. And, the CFO pointed out on the call and in the investor letter as well that, they highlighted that they expect deliveries to be higher than production in Q2. I don't know if that's going to happen. But Michael, do you want to know? Michael has he shared his prediction with me today that he expects deliveries to be about the same as production in Q2. And so I don't know if Tesla will be able to deliver more than produced. But the fact is, again, Tesla has lowest days of supply across the industry. So I'm not too worried about it. But, these high interest rates across the economy are not helping Tesla, obviously. So I wouldn't expect a huge increase in demand for Teslas or really any other vehicle until the Fed starts cutting until after the Fed starts cutting rates. So that's not going to happen for the next few months, or maybe next couple of quarters, really. And but Tesla, unlike legacy automakers, has two things going for it that I think will allow Tesla to swim through these turbulent waters easier than other legacy automakers. One is FSD. FSD V12 shows improvement in performance, and the steering wheel nag coming off, I think will have some positive impact on the take rate. We don't know how much yet. We'll see. And then on the other hand, Tesla Energy Megapack margins are rising as Tesla increases production and optimizes production at Lathrop on production line 1. So I think those things are going to help. And also the Cybertruck production rising, I think, is going to help Tesla's bottom line and margins in the back half of this year. The other automakers don't have those benefits. They are stuck with their automotive, lower margins and the impact from high interest rates. So Tesla has those benefits. But Magic, do you have a price target for Tesla stock?
Assuming depends on a lot of variables, but just the auto business, we value it around $40 to $60.
Okay. And you and I have a coffee bet that Tesla's cash balance will decline below $10 billion. You said in the next 12 months, right?
Yep. And I have another leg here. So this 0.99% financing, since I believe they are sitting on too much inventory, will extend through 6/30 because that's the end of the quarter. So
yeah, I think that's fair. I think we'll see some other incentives coming in June. I don't doubt you on that. The macro backdrop is horrible right now for automakers. It's just bad. And especially for Tesla, because Toyota has been able to turn people's range anxiety into profit selling hybrids. So it's going to be difficult to kind of change that mindset in the near term. But I don't think Tesla will get into a cash crunch as we defined it, which is less than $10 billion of cash balance.
Yeah, and I think you pointed out that they said that they were going to be able to sell what they could produce. But the issue here is they're sitting on a ton of inventory. So if they sell what they produce, they still have an inventory problem. So they have to sell more than they produce, right?
Well, again, the inventory days of supply is lowest across the industry, even lower than Toyota. So I wouldn't call it a problem, but it is higher than usual for Tesla. And by the way, I never use the phrase they're going to deliver or sell whatever they produce. I think that's a very kind of cop out kind of type of statement that people use. Tesla, in fact, is cutting production in at least 2 factories. So, and every automaker makes those adjustments around the edges to make sure they sell whatever they produce. Like that, that's not new. Machine is go ahead.
Sorry, go. Yeah, I'm just saying. Yeah, look. In general, I think autos are just the whole sector. I wouldn't touch it, but I'm just saying is that this is a macro. This is a macro issue on top of what's going on. So yeah, I agree. Macro, I really wouldn't go long any auto manufacturers that I'm looking at right now. It's very tough in this environment. The consumer's pretty stretched. So just in general, right, that's not going to help anybody.
Okay. Machine, is your connection better?
Yes, I was in the Popeye's abyss for a bit.
Okay. Let me ask you something. So you've been for the last 3 days straight coming up and making sure we hear that used resale values for Teslas have stabilized. Where do you think they go from here to year end?
I don't know. I don't think there's going to be considerable appreciation unless FSD really improves and that becomes an attractive thing. Otherwise, I think the overall economic situation is not good, and I don't. There could be a slight appreciation, but otherwise, I think we're kind of stuck in the doldrums here for a while.
Okay, let me ask you straight. So right now, Tesla average price on Car Gurus is $31,345 per car. Average listing price on Car Gurus for Tesla is $31,345 per. Do you think it's going to be higher or lower at year end?
Higher. Yeah, just a bit. I think.
Higher a bit?
Yeah, my prediction would be, there's two forcing functions here. One, if the economy gets worse, that would put downward pressure, but there's already been so much downward pressure, specifically on EVs, that I don't know if it would go much further. And then there might be, if there is such bad economic conditions, then there might be an interest rate cut, which I guess probably won't put too much demand. I don't know. That's why I feel like it's just slightly going to be higher. That's my bet than it is now.
Okay. Are you willing to take a cut at that? I think that it would be lower.
Okay. Yeah, we could do that.
Okay.
At the end of the year. That's your.
Yeah, at the end of the year. That's right.
Okay.
Okay. Grant.
Yeah, it's an interesting topic, the used car prices. I am not an expert on this, but isn't there seasonality that you'd want to factor? I mean, it feels like that price point is something that is at the end of a very long equation. Like, what are we ascribing it to? We're saying that demand for Teslas is higher now than it was a couple months ago, so the prices are higher. Is it that simple, or are there other factors we'd want to include there?
There's definite seasonality, and that's probably the main reason Yaman's betting at the end of the year it's lower, because I think that would be a low point in the season. So, I think the peak is it spring? Is the peak? I haven't studied in detail. Spring, summer are highest prices, and then winter are lowest. So definitely part of the reason it's up is because of seasonality, but it does not explain all of it. There's Tesla prices have been massively dropping for a year and a half. So, seasonality didn't matter last year, and they're only stabilizing enough to where seasonality matters now. So that's already an improvement versus what was happening the last year and a half.
Inflexity. No hands mode while I type this up. No hands mode. Go ahead.
Yeah, I was just saying this was a comment on the insurance stake. So the company will be financing the cost in-house only. So it will be Tesla's financing arm. It is not any external bank. Analysts are assuming that it will be booked as a price discount on the manufacturing side, and the financing side will obviously get a spread of profit.
So they're going to finance it in-house, is what you're saying?
Yeah, they'll be financing it in-house.
Okay, so that all of this is going to be financed in house. So again, the problem here is that you can book a accounts receivable and sales that's very, very bad for cash. See, Tesla already has had a negative cash flow in last quarter, so this is going to exacerbate the cash issue. So they can book the revenue, but the time that they're going to get the cash is going to be a little difficult.
Well, I guess that helps your side of our bet, right? Of our cash balance bet in the next 12 months. So there you go. Elon's trying to make you win our bet.
I guess, yeah, I guess.
He probably is listening to these spaces and he's like, I want Magic to win his coffee bet against Yaman. Therefore, we're going to in-house this financing. But the fact is, as you know, they can actually securitize these receivables after they age them a little bit. And I think you mentioned before that you would expect the discount to be 10 to 20%. I don't think it's going to be that much, especially if the credit scores are higher, right?
So it depends. I've worked in the past with people that factor receivables, and they usually collect. It's about 80% of what the value is. Now you can go up to 90. It depends on who's on the other side. From my experience, it's 80 to 90% because they have to take some sort of risk. They wouldn't take your accounts receivable at 100%. There's going to be a haircut there.
Yeah, there's definitely going to be a haircut if they securitize it. And yeah, I guess we'll see. Grant.
Yeah, I'm not an expert on the different forms of auto financing, but it seems crazy to me that Tesla would do this themselves. I mean, when we say captive financing, is it still possible for them to be factoring or getting some leverage on the back end? Because it feels like that would really exacerbate the cash burn. I just don't see how they're positioned to do that. What's the source on this idea that they're doing this financing themselves?
Finflexity.
This is according to Morningstar and Barron's.
Sorry, Morningstar and who?
Barron's. The news publication.
Can you go ahead and share that if possible, or either DM me or I just want to check it. I'm not saying that.
Yeah, just reply to the space with the link, please.
Yeah.
Yeah. Interesting topic. There's so many moving parts, so many different directions. We have like maybe 10% of the information right now to fully understand the impact. And we're going to find out more with the 10Q. And I'm sure the CFO is going to make some comments on the next earnings release. And yeah, but let me ask you something, Grant and Magic. Is your primary thesis, is your primary point for your bear thesis on this specific topic that Tesla's gross margin will drop or Tesla will run into a free cash flow issue? Which is it?
So, I mean, I'm just looking at the auto business. I mean, everything else, I mean, I just don't really look at auto business. We're just looking at share price to what it is. It's price to value. So based on the trends of revenue growth, based on margins kind of compressing, just that combination, I mean, that's kind of where we are. I think margins will compress, maybe stabilize at some point, and cash is going to be an issue. So I think it's a combination of those two. But it's more of like, again, the thing is valuation. So if you buy something that's worth 20 grand for 50 grand, it's going to come back to 20 grand. So it's more of a valuation. You know, if the auto business, we're going to.
No, but I was asking specifically for this financing deal, the subvented loan program. Are you saying it's bad for Tesla and its investors because of a hit to gross margin, or because of, it's bad for free cash flow if they finance it in-house?
Well, again, I would have to figure out what if let's say that the discount was equal to the one in Q1, right? Like, it's bad for free cash flow. So again, it seems a little bit desperate.
I think it's bad for both in my mind. I mean, I just don't see how they have the balance sheet to do this on some level. I mean, it depends how many people would take advantage of it, but I mean, what do they sell each? I mean, was it like 25 billion or something? Like I'm just doing like round math. It's like if
I mean, dude, like this is only for Model Y in US. Okay, if they do it in house, let's say, for example, 50,000 people took advantage of it. Okay,
Yep.
and 50,000 times $5,000 is $250 million. If it's $10,000, it's $500 million, and they have no debt on the balance sheet, no recourse debt. They have more than $20 billion of cash, and we're talking for half an hour, 40 minutes, on a few $100 million.
Wait, hold on. The 5,000 and the 10,000 that you used, where did those come from?
Those are the kind of estimated impacts of the financing cost, depending on the credit score and the term length of the loan.
Yeah, but from a cash flow perspective, they would be giving up the collection of the full amount and instead staggering it over 60 months. So in my mind, it's like, what's the total? Let's say they put, if a Model Y is like, I don't know, you said 40K, like they put, let's just say they finance, 75% of it, 30K. I think you would look at that 30K and they would collect 1/60th of that in month one instead of the full amount. I mean,
okay, so it's a $1.5 billion type of hit to free cash flow. If they finance 50,000 people and 50,000 of the deliveries, which I think is a very high number because this is only in the US for one trim, and they still have to qualify with the applications and everything, the buyers. And 50,000, and they finance $30,000 of it, you're looking at $1.5 billion. And like I said, they have no recourse debt on the balance sheet. They have more than $20 billion of cash. And all the other considerations around Tesla Energy is growing profitably, the margins are rising, FSD take rates are likely rising as the software improves. So I'm not too worried about
they
it.
don't have like a ton of cash to throw around. Like deciding to have it off their balance sheet and to take the $1.5 billion hit is just like an interesting decision. And you don't know what the number is either. I mean, maybe it's 100,000 that put 10% down. I mean, like the numbers just seem tough. There's also some cash in China that they might not have readily available. So it's not really the case that it's 20 billion in the US. It's just tight.
Yeah, I'd like to add on that the balance sheet. I think we brought it up last time. So you take the 26 billion and then you have to deduct accounts payable and other short-term liabilities, and the cash picture is much less healthy than I think is projected. They need to pay back their suppliers eventually. So once you factor that in, the cash balance is more realistic.
Yeah, we talked, like my response to this was, I mean, you can't do it that way if you want, but you also have to consider accounts receivable, the finished goods inventory, and all the other current assets. You can't just take cash and then subtract your current liabilities and not account current assets. That makes no sense to me. That's a very biased way of looking at it, I think.
Well, it's a lot easier to transfer. You have to transfer something from inventory to cash is much harder than it is from cash to liabilities. So the thing is, and that's what I'm saying, it seems like they're trying to shore up cash with this program because the cash balance. This is something what's usually, this is something that someone wouldn't do on a normal basis unless they had to.
Dude, every single other automaker makes this. Are you serious? Every single legacy automaker does this to like 100 times degree. And they don't have policy current assets. They have $100 billion of debt on their balance sheet. Are you serious right now? All right, I'm just starting to get frustrated.
Yeah, they're doing it right now.
Yeah, Bill, Bob, Joe.
Yeah, just wanted to address what Grant said about recognizing 1/60th of the revenue. That's not the way it works. When the car is sold, they recognize all of the revenue. The loans are done by third parties. And even if you think that this is going to be dilutive to gross margins this quarter, which maybe it will be, it's going to be a positive to free cash flow. Most of these cars were built in Q1. They had a 50K inventory build. They're going to turn that inventory into cash. And so what they guided to on the call was returning to positive free cash flow. And that's because of a program like this where they're turning inventory back into cash, even if the margin is dilutive. That's exactly what they guided to.
Grant.
I may have misspoken. I agree they get all of the revenue up front, but if they're financing it themselves, they do not get all of the cash up front. I don't see how, making loans off your balance sheet and enabling people to pay you back over 60 months is somehow beneficial from a cash flow perspective. It's just not.
Yeah. I mean, his point is that these cars were produced in Q1. So,
Yeah.
Right. I mean, Bill Bob Joe is correct if the deliveries are higher than production in Q2. Okay. And yeah, when Magic says in Q1 the cash flow was already negative, that's because production was much higher than deliveries. So that's going to reverse in Q2. All right, I think we beat this horse to oblivion. Is there anything else on that 100 tweet thread we got to talk about?
Probably, but I don't know. I don't have it open.
Are you having your Tesla Q spaces daily?
Definitely not daily. And it's not just me, there are dozens of us.
Dozens, wow.
It's a development reference.
Oh, okay.
Yeah, I mean, do you want to talk about the ISS shareholder, or is that the source spot?
Yeah, we can talk about. I mean, ISS and Glass Lewis, they recommended against vote in 2018 as well. So I was hoping that maybe one of them would realize this is for services already provided, but I guess not. I don't have the details of their reports. Did you guys read the reports themselves or just the headlines?
I read just the headlines, so I'm not sure about this.
Well, let me ask you this. So one difference between today and 2018 is today we have passively managed funds holding Tesla stock. Do you think Vanguard's and the BlackRock iShares and State Street, do you think they're going to vote for or against, given ISS and Glass Lewis both recommended against vote?
So from a compliance standpoint, the thing is, if they vote yes and something goes wrong, they're going to go back and say, hey, well, these two proxy advisors told you no. So why the hell did you do it? So from a standpoint of State Street and BlackRock, all they want to do is they don't want to get pinched. They don't want to get hurt, and they don't want liability. So they're like, hey, I think they have a huge incentive to vote with the proxy advisors. I'm not an expert on the field, but that's what I get from compliance standpoint.
Yeah, that's my kind of base assumption as well. That if anybody has to go with the proxy advisor firms, it's probably going to be the passively managed funds. But I don't think it's 100%. I don't think they have to go with it. But I agree with what you said, which is if they go against what the proxy advisor firms recommended and something does go wrong, then they might be a liability. I'm not sure. I don't know the details. Maybe I should call one of them and see what they're thinking. Grant?
Yeah, I think another consideration is that they're active across a pretty wide range of public companies. And even if they understand that voting this way for Tesla might cause them to take a little bit of a bath there, I think they probably understand that they don't want to normalize massive dilutive equity comp to CEOs. They are thinking probably with a slightly wider aperture than a lot of Tesla bulls who are slightly more focused on this particular stock. They don't want to say, yeah, we want, generally speaking, to be in the business of giving out equity packages of this scale and size to our executives. That is a pretty obvious incentive for them that kind of extends beyond Tesla specifically.
I mean, you could make the same argument for any investor, right? And yet this comp plan was voted for by a large portion of the investors. Maybe, a counter argument would be maybe you do want to normalize it given the results.
I don't know what you mean by the results. I mean, I think that the shareholder base has definitely turned over a good amount. Stocks in the S&P 500 now, there's a different ownership makeup. But I don't think that a typical Tesla bull, I mean, I'm not trying to be demeaning or something here, but a lot of Tesla investors who are just very, very excited about Elon and everything that he does. We're happy to do this, but I think someone who's just got like a 1% of their portfolio, 0.5% of their portfolio in Tesla might be like, yeah, I don't want to pay that guy.
Sounds like wishful thinking to me. Finflex had posted a summary of what these proxy advisor firms said. Institutional Shareholder Services ISS said no. Glassfully says no. Egan Jones said yes. And he has a bucket called Southside Analyst Majority said yes. Okay. Lauren.
Hey, I think you could also make the argument that index funds might see it the other way, that they don't want to set a precedent that Delaware courts are going to start coming in, possibly politically motivated, and like changing the will of shareholders years after the fact, trying to rewind time. That could be a situation that passive funds, hey, that's not a precedent we like. We think shareholders should be in charge of these companies, not Delaware judges. Not saying that'll make any difference, but it's another way to look at the same issue.
Grant.
I'm going to respectfully disagree. I mean, if you have a broader sense of how Delaware courts operate and the reason that a lot of companies get incorporated in Delaware, it's because they have a very strong reputation as being shareholder rights advocates. That's actually at the core of this decision that this judge made. I know it's not the opinion of a lot of people here, but the reality is that Delaware courts advocate for shareholders reliably, and that's why more often than not companies get started inside of Delaware.
Okay. Magic, there's a reply from Josh in reference to our earlier conversation. He says, if someone brings up using TVM calculator, please have them run through their numbers. I have the rate discount program costing about $6,000 per Model Y using a 4% discount rate.
Yeah, I'll send over a spreadsheet and we can recreate that. I mean, we that if that's in question. I mean, I'll be 100% transparent. You can play with the numbers and we can get there. It's more of an approximation. So I'm not saying those are exact numbers.
Yeah. I think a key assumption, that's my estimate too, about $5,000 to $6,000. That's why when it first came out, that night we had a space and we talked about how this is very similar to the new inventory discounts, about $5,000 to $6,000. And for it to be $10,000, Tesla would have to heavily buy down and go into that subprime credit level. And I don't think they're going to do that. I mean, that's an assumption, obviously, but I don't think they need to do that. Let's see what else we need to talk about here. 12.4, we don't have it yet. We're maybe waiting for 12.4.1. I see Omar in the crowd. If he wants to come up, maybe he's busy right now. Grant?
Yeah, I wanted to share some of my experience in using FSD for the first time this past weekend, if that's cool.
Yeah, go ahead.
Yeah, so I was down in Florida and went on about a 30-minute drive on FSD. It was interesting. I've obviously seen a lot of videos of it, and I would say it kind of performed in line with what I expected. It did a good job. There were 2 incidents that, we had to intervene with, but in general, it was cool. I mean, you kind of let it do its thing. It's obviously a little anxiety inducing at first, but then you kind of get used to it. The 2 issues we had were kind of like one thing with a bike lane, which wasn't a big deal. There wasn't anyone there, but it was just a little confused in terms of the lane changes. And then the other was there's like a gate in the entrance to this neighborhood, not like a big metal gate, just like a parking lot style thing. I don't know what you call it, just like the 3-inch white and red thing that goes across that it apparently struggles to see. So I was told by the owner that was like a regular thing, but tried it out anyway and kind of hit the brake as it was approaching it. So that's a little bit of a concern. I mean, what's interesting to me about the whole thing is that it's cool. I mean, it's very cool. I just think that it's possible for people to disagree on how close it is to being a robo-taxi. Like, I just don't think I understand the tech is moving quickly, hopefully, but I personally don't think it's close to being a robo-taxi. So it's like, you can see the same thing, but kind of have a different opinion on it, I guess.
Yeah. I mean, what you described is very similar to my experience too. You're in New York. Where in New York did you drive it?
I was in Florida this past weekend. So it was like a mix of neighborhood and some, like, I think we went on a road that was up to 50, but kind of just suburban and surrounding larger roads, nothing on the highway.
Do you know what version you were on, Grant?
I know it's V12, but I don't know which version of V12. Someone who used it for the subscription, like got the free trial sort of thing.
Yeah. John Lee?
Yeah, let's go back to the Delaware court decision and such. I said in the after party that I did vote no and started to talk about the reasons why. I'll start with saying that, I voted yes in 2018 and think that Elon does deserve the compensation package. But I didn't vote for lawyers getting the, whatever fee they would be assessed from the Delaware court case. And I think that both the board and Elon have some responsibility in the way that the original 2018 vote was cast, for, the court being able to overturn the compensation package. I don't agree without having seen any evidence that anything that the Delaware court is doing is politically motivated. I think that they were, finding the reasons of law on why the original stock, the proposition was voted was not done properly. And I think that Elon and the board didn't get good legal advice on how to structure it. So I feel a little bit bent about having to pay as much as $5 billion to lawyers, because basically Elon and the board didn't do their job.
Got it, John Lee. Thank you. So you replied with that longer answer below that poll on Patreon?
Yeah. Oh,
Okay.
on Patreon? Well, on the after party.
Okay. Okay.
If there's a Patreon thing to fill out, I'll do that.
Okay.
But I'm hoping that the appeal goes through and he gets the his compensation, and we don't have to pay $5 billion or whatever the fee that is agreed on to these lawyers. And talk me into changing my vote, because if you think that my vote will help not pay that, the lawyer's fees, that would cause me to go back and change that.
Grant?
Yeah, I want to respond to two things John said. First, I totally agree. I mean, I am kind of disheartened whenever I hear people say that this was a political hit job on the part of the Delaware courts. I mean, Delaware courts, business courts, U.S. rule of law, property rights, all the above are actually, in my mind, a big part of what make this country kind of a fantastic place and why it's a great business center for the world. Like, disrespecting those institutions is kind of like burning down the thing that makes America great, in my view. I know that's kind of, you can say that's biased, but I think it kind of demonstrates the lack of understanding of how some of these systems and institutions work. It's not to say that you need to never be skeptical of anything that they do, but I think it's worth just trying to zoom out a bit and think with that context. And then second, John, I feel like it slipped me. I was trying to remember the other thing that you'd said. Oh, on the specific comp to the lawyers, I think that they have proposed that fee structure, but I don't think that would actually go through. I think that would be subject to a review by the judge. I don't know that is baked into it. Like, the vote doesn't necessarily mean I don't know. I just know that that's not a final number, is what we'll say.
Yeah, the $5 billion was thrown out, but I don't believe that'll be the case either.
Okay, thank you. Let's hear from Omar what he thinks. Omar, welcome.
Hey, yeah, sorry, I was driving around. I just got home.
Are you testing FSD?
Well, not testing FSD, but just using FSD. We were looking at some houses, and I think they may have accepted our offer. So that's good
Nice,
news.
congratulations. That's awesome.
Yeah, it's kind of a shitty house, though. It's gonna need some work, but it's
Takes
in a good
effort.
place.
Good.
Yeah,
When you
we
say
got some
we,
construction in the family. It was
when you
me and
say
my uncle, who's an architect, and my other uncle, who's a contractor, and my dad went to go check it out and talk to them. But anyway, not to get
awesome.
us too off
All right.
track.
Okay. All right. So, what do you think about all the Delaware courts talk?
Yeah, so ISS came out yesterday, and they're voting no. Again, I think that's kind of expected. They voted no on the 2018 compensation package, so eh, they voted no last time, and it was still approved. So I don't think it necessarily tells us what the outcome is going to be. But overall, I think people have been talking about it a lot compared to how much it's actually going to matter. It probably is not really going to be as big of a deal as we've really been discussing. I think, in terms of the case itself, I don't think it was necessarily just about politics, obviously. There was a little bit of political tinge to the decision, starting out is should the richest man in the world be paid or whatever? So I think that's kind of what people are getting it from. But overall, I mean, they just kind of had a tough standard to prove that it was fair, right? And so, in a way, John is right. They didn't cover their ass enough, and they kind of got into this situation by not covering their ass enough. So it's an unfortunate situation, but I think really her problem wasn't that it was you can't give your CEO this kind of incentive package or anything. Just that proper disclosures had to be made to the shareholders, that they understood the relationship between board members, that type of thing, before they voted. And if people understand that and they still vote yes, then I think it's really hard to make the argument that there was anything untoward going here when the shareholders are, just pretty vocally approving this package. So we'll see what happens. I think Adam Jonas did a survey and said like 57% of people expect it to be passed. Most people expect there to be a positive income if it does pass, and 80% expect a negative price action if it doesn't pass. So I think that's interesting. We can speculate endlessly about it, but we'll know the answer in 2 weeks.
Okay, just one point that Magic made, which I share that point. Today we have quite a few passively managed funds in Tesla stock, whereas in 2018 we had none. So Vanguard, BlackRock, iShares business, and State Street, they own a pretty large chunk of Tesla. Do you think they're going to have to go with the proxy advisor firm's advice to vote no?
I think it depends. I'm not necessarily the person to ask how they do it. I think depending on the index fund, some ask their fund's constituents to vote, and then they vote in proportion to what the fund holders say. Some go based on recommendation from a proxy advisory firm. Some may make their own decision. So I think you'd probably have to ask the individual firms.
Thank you. Pennington.
No, you guys just covered my point. Wanted to point out that the ISS and Glass Lewis, they don't have votes, so we don't know how the vanguards of the world are going to vote. I mean, personally, I would like to think that if they want their asset to go up, they will vote yes and disregard what Glass Lewis and ISS said, but maybe we'll find that out. We will find that out, but not until the vote is concluded, unless they say something prior.
Yeah, I mean, there's a chance we may never find out what these firms voted either. We may find out the final result, but who would voted what depends on if they want to share it. Really, Magic.
Yeah, respectfully, I would say that I don't think that BlackRock and Vanguard are going to make a decision based on what's going to make the stock go up or down. I think they're going to do it based on corporate governance and bylaws and pretty much what the advisory is. I mean, that's from what we've seen. I mean, that's, again, we can argue about what that's going to be like, but it's such a small part of their portfolio, and they're kind of a custodian for other people. So I don't know if they're factoring in what the effect on the stock price. I think that's less important. For long-term investors, that is, but for the passive vehicles, I think that they're less interested with how this is going to affect the stock price.
You don't think they're concerned with the returns they're providing to their fund holders?
I think they're more.
Not the passive managed funds, not the passive managed funds. Now, to be clear, BlackRock has both active and passive managed funds. But for the passive managed funds, their primary concern, really their only concern, is variance from what the index does. So if the S&P 500 index goes up 1%, they want to make sure, like literally, their top concern is that it goes up 1%. Their fund also goes up 1%. If it goes up 0.99%, it's a big problem for them. And then the secondary concern they have is to just minimize the management fees. So these are Vanguard. Most Vanguard funds are passively managed, like almost all. BlackRock, the iShares business they acquired about a decade ago or so, is passively managed. They're really known for mostly their passively managed funds, but they also have actively managed funds as well. And then State Street is mostly passively managed. So those three firms, they don't really care how much Tesla stock goes up in the next 5 years or goes down, whatever, or who's the CEO is. They don't care about that stuff. Grant?
Yeah, agreed. I think that certainly true for the index investors. Even some of the larger active managers who might have Tesla in their portfolio, it may represent a relatively small stake. And I do agree with what Magic's saying. Corporate governance is important. I think one way that they're likely framing it is that, they could suffer a little bit of a blip in this one position that's, 1% of their portfolio, instead of having to worry that, you're going to have these crazy comp packages going on everywhere else. I mean, the way that the comp, consulting game typically works is they'll all benchmark, they'll all index, and having this data point that's at this much, much higher size would presumably result in more comp to execs, and it, kind of exacerbates some principal agent problems. It's just not something you really want to see.
Lauren?
Yeah, I generally totally agree with the way Yaman has framed it, but I'm curious if anyone knows, when these guys are managing these index funds, are they subject to like a fiduciary standard type of a deal? And if so, could there possibly be any danger to them if they vote against this and then the stock falls apart, it fails? Could their shareholders come after them in a class action lawsuit and say, hey, you didn't vote our rights in a fiduciary way that was good for our benefit. You did it for your own reasons. We're coming after you, kind of a scenario. I don't know the answer.
Okay, Grant?
Yeah, I mean, I think this is exactly why these advisory firms exist, so that in a scenario where a shareholder says you didn't do the right thing, they can be like, look, we relied on the advice of these experts in the field. Like, all of these consultants in my mind are functionally just outsourcing accountability and making a pretty penny off of it. It's like for that exact reason that they exist in the first place. So with that in mind, they would likely be exposing themselves to more liability by not following the advice of the experts.
That makes sense to me.
ESG Hound and then Flexity.
I was going to basically just say, similar to what Grant was saying, I did some advisory work for a MLP that was switching back to a C Corp years ago and brought in Glass Lewis and ISS. One thing I did want to bring up to people to realize is that Glass Lewis and ISS aren't, as you guys have picked up on, they don't tell you what to do. They tend to they're like an insurance for risk and governance type decisions, and that's important. But one thing that people don't understand, I think, about them is that they have a cooperative process both with companies management and then also with shareholders. So when you see that decision from Glass Lewis and ISS, especially ISS was actually pretty shockingly, I think, neutral on the Texas decision because there's not established corporate law. They actually said we're fine with it either way, which kind of shows that they're not to frame them as being like advocates or whatever, or like out to get you is just not. I don't think it's good framing. I don't think it's helpful framing for anyone, bulls or bears or whatever. But the other thing to remember is that sometimes Glass Lewis, when they're doing, I know Glass Lewis a little bit better because again, I did some work that touch what they were doing, is that they will actually get comments from people like your Vanguards and your Black Rocks and whatever, and they sometimes those decisions are them basically reframing stuff they've heard from institutional investors and giving their justification post hoc. So it's a very collaborative process with them, the management of the companies, and then also kind of your big shareholders. You're kind of getting a consensus opinion of like the middle of the line kind of safest view of a
All right,
of a
man,
of a
you are
process.
so verbose. It's crazy. You
So
can't say
anyway,
all that in literally one sentence. We got the point.
I'm just a
And
rambler,
by the
man.
way, it is also speculative too. Like I'd never heard that before. But anyway, Billy Bob Joe, and then
that's it. So
all right,
thanks
Billy
for
Bob Joe,
holding
and
the
then
space.
oh my goodness gracious, Billy Bob Joe, and then Complexity.
Yeah, I have the data in front of me on the institutional ownership, and between Vanguard, who's the biggest institutional owner, BlackRock, State Street, and then you also have to include Invesco because they have the QQQ fund. And then when you dig into actually the funds that they own these shares in, over 90% of it is passive funds, and I have a breakdown of all those funds where they're owned. So there are some active institutional managers and funds out there. If you look at American funds, they have Tesla in their American funds, the Growth Fund of America. They have it in their New Perspective Fund. Barron has it. But when I hear Bear say, aren't you guys worried about this vote? We see the CalPERS come out against it, et cetera. I think the answer is yes. And I think I've listened to this space long enough to see that the first vote was like 73%. And I think most of the bold predictions here are that the vote will pass with about 55%. So I think most bulls do expect this to be a much tougher vote, and it's going to be much harder for retail to outweigh the larger institutional ownership in these passive funds just because the market cap has grown so much.
Complexity.
Yeah, Grant was making a point earlier about how they would much rather not do this such large comp package because it would set a high target for other 500 companies in the S&P 500, let's say. But the point there is that they don't compare Tesla against the other 500 companies. They only compare it against the other 10 automakers. So it's not a point of whether if you approve this, then you'll have to approve for all 499. It's just that you will have to subject other automakers to this. So it's not like that.
Okay. Billy Bob Joe, what percent of Tesla shares do you estimate are held by passively managed funds?
About 15%.
No, I'll take higher on that. I mean, I'm looking at so Morningstar.com has a buy fund and buy institution. Let me put you on mute. Vanguard 7.3, BlackRock 5.9, State Street 3.5%. So those three alone together, you're looking at 16.5. And then I think there's a bit of a Fidelity in there as well. And there are other passively managed funds in the thousands of investors that we have. So I would guess more, probably closer to 20%. What do you think?
Yeah, you may very well be right. I have some different data. I work for a large brokerage firm, and I'm using their data, so not Morningstar. And so, we show BlackRock Institutional Trust with 3.85. BlackRock has different divisions, of course. Their asset management group has another 0.68. Some of that may be actively managed. So yeah, I wouldn't. It could definitely be closer to 20.
Yeah. Grant?
Sorry, I was doing something else. Forgot what I was going to say.
Okay. Yeah, look at the top funds who have it. Trying to see if there are any, like among the top 20, except for Barron Partners Retail. I think everything else is passive here. Grant?
Yeah, it was. I feel like there's a lot of consensus emerging that even if this vote goes through with a yes, it's certainly not a done deal that Musk will actually get this comp package, right? I think that the more recent statement that the Delaware Chancery judge made in response to the Tornetta, complaint about Tesla just trying to get this decision made in Texas was kind of indicative of that. I feel like there are a lot of news articles that summarize this better than I just did. My understanding is that even if this goes yes, it's just not necessarily going to happen. I feel like there's a very good chance, in my mind, this is my opinion, that Musk will never get this comp package. Curious if people have thoughts.
All right, we're going to get back to that. Billy Bob Joe?
Yeah, I put my hand back down. I was just going to say, of the top holders, the funds that are not passive, I would start with the Statens Pensjon Fund, Utland. It looks like that's a Norwegian government pension fund. They have about 1% of the stock, so I'd be curious if they've announced how they're going to vote. And then the rest of it, a lot of it is passive. There's a couple in there I pointed out, the American funds. Those are actively managed funds. That's another percent plus there, the Barron Fund. But yeah, the rest of it is almost all passive.
Sorry, which fund you said? American funds? New Perspective, is that it?
Yeah, the Growth Fund of America and the New Perspective Fund. Those are both actively managed large cap growth funds.
Okay, that's good to know. Okay, so together they have 1%. What about Capital Group Growth Fund?
I don't see that one. But Capital Group, I believe, is American Fund. So we may be talking about the same thing.
Okay, yeah, that's true. Okay, good. And then trying to see anything else here. Okay, good. Yeah, wild. There is a Harvard study out there that says something like, as of 2021, passively managed funds held 16% of the overall stock market. But if you include closet indexers, then it can be as high as 1/3. Direct indexers and closet indexers. Anyway, all right. Very interesting topic. I think it's gonna be a close call. I mean, the more I look into this, especially passive investment funds, and now that we know both proxy advisor firms came out with a no recommendation, it's gonna be a close call. James says in the replies, James MP, Tesla Tiger King, says ISS recommended the move to Texas and also vote for Kimball. Omar, is that right?
I hadn't heard that. That's interesting if it's true.
Yeah.
They did,
Can
yes.
we get a second? They did? Okay, who's that? Tell me.
ESPN. Yeah, no, it's funny. They had the exact ISS when it came to Murdoch versus Kimball. Them and Glass Lewis had exact opposite recommendations. So Glass Lewis recommended for Murdoch and against Kimball, and ISS recommended against Murdoch and for Kimball. So in that case,
What
that's
was the
probably
rationale for recommending voting against Murdoch?
it was something about there's a better oversight, I think, of like risk on like accounting or something like that. I don't think that there's a ton of accounting strength on the board, and I think whatever position Murdoch is in, they just pointed that out. I don't know if it feels like maybe they're just I don't know if they're just it's a really interesting dynamic because they came out with basically exact opposite. So in that case, if you're talking about your passives there, if they subscribe to both services, which any of the big passives would, they may just split the difference and vote for yes for both, since the management team is recommending it. I don't know how that will work out, but that was a really interesting dynamic. I don't know if it really matters though.
Lauren, and that Finflexity and that Klaus.
Hey, Iman, cut me off if this is too much of a story, but listening to this space a couple days ago reminded me of the vote for Solar City, which had just gotten into Tesla, and the panic in the Tesla community felt very similar to right now. Like everyone was pissed at Musk because the Model X ramp was a disaster. The Brexit had happened. It had been a couple years since the big run up after the Model S. And I mean, there was real fear that it was not going to pass and the whole Musk empire was going to collapse. And it wasn't like now where all you could do is speculate. You could go buy Solar City shares at a fixed conversion price, and they were running at a huge discount to the Tesla shares. Like the markets were betting that, hey, this might not pass. And being reminded, and then once the vote came, of course, it passed by 84%. It wasn't even close. Remembering all that made me feel a little bit better about this vote.
Well,
Take it for what you with. I know it's a
okay.
different
No, I got you. Right. So first of all, I always welcome stories from back in the time. I think we need more stories from long-term shareholders hold in the space. Secondly, the specific M&A transaction and all the discounts around it and talk around it is when I got started writing about Tesla on Seeking Alpha in the summer of 2016, and that was one of my first articles because I did see all the bear articles and all the worry about across Tesla investors that you're talking about. That if Solar City acquisition wasn't going to go through, that the Musk empire was going to fall apart. And I pulled up the institutional investors for both companies, and I realized they're the same firms. And these firms like T. Rowe Price and Fidelity have been with Elon for a long time, even before that. So I'm like, if Elon says this is what we need, they're going to vote for it. And that was my first article on Tesla. This is different. This is a different situation. I was pretty certain at that time that Solar City acquisition was going to go through. And I specifically wrote about the conversion ratios and everything too that you're talking about. This one's different primarily because the passive funds control somewhere between 15 to 20% of the shares. And the two top proxy advisor firms came out recommending with a no against this vote. We have CalPERS that came out. Like if we add up to people who already came out and they're going to vote no, it's a pretty sizable portion. So I think it's going to be a close call. So if you haven't voted, and if you voted against, like you should reconsider because this could mean pretty bad results for Tesla and movement towards sustainable energy. Like, if you think that if Tesla fails, others will pick up the slack, I think you're mistaken for two reasons. One, Rivian's future is not as bright as a lot of people think. And two, BYD alone can't do it because they have no initiatives around robotaxis, first of all, and you do need robotaxis to transition. Otherwise, hybrids will take over. Three, I don't want to fucking drive a BYD. Michael?
Sorry. So I just wanted to comment about how I found it interesting that Glass Lewis actually has recommended three previous redomestications from Delaware to Texas. And Tesla actually called them out on this and said, "Hey, you guys are hypocrites," essentially. And they posted like a many part point by point rebuttal of Glass Lewis's points, and that was at the top. And I found that pretty interesting that they recommended three previous redomestications, but not this one. And ISS, it makes sense that they also recommended four previous redomestications from Delaware to Texas, and they're in line. So they're suggesting four. So it's interesting.
Interesting. Thank you, Michael. Team Flexity.
Yeah, since we were talking about funds that are voting for, the pay package, this actually came out a few days ago. But the Scottish Mortgage Fund, which is co-managed with Bailey Gifford, they are like the 15th largest shareholder, I think. It was on a Financial Times article. I'll link it down below. But they are voting yes for the pay package, and they said that, and they had met with the board of directors. So they were traveling around for across Europe to convince funds to vote for the pay package, and that's currently going on. Once Europe is done, the board will then come to the United States and then pursue US funds.
Okay, thank you. Klaus, then Grant, then Yoda.
Good evening. I'm just intrigued by this, since that the Delaware court already found that the pay package wasn't valid for several reasons about how the board acted or didn't act. This preoccupation about who votes and how they vote, it all comes down to, why do you actually believe if there is a majority vote? Why do you actually believe it will actually make a difference?
Well, one of the reasons why the Delaware judge said, enough disclosures weren't shared, and this time they are shared. So if the vote still passes, then goes against
but
them.
disclosure was just one thing about it. The main thing was that the board didn't actually do what they were supposed to do to make sure that the company got the best deal. So there's nothing that's changed in the sense that the deal hasn't improved since then.
Okay, Grant, Brandon.
Yeah, honestly, I was going to bring up the same point that Klaus did. I mentioned this earlier. I think there are a lot of people who believe that this vote doesn't matter because, they're trying to do it. I think there's another lawyer who comes on the space sometimes who talks about how the specific legal mechanism that they're attempting to use to push this vote through is not designed for this purpose. Like, there are a lot of reasons why, even if this vote is yes, it's still very probable he will not end up with this comp package. I just don't. It's interesting to me that no one is talking about that, because I think if you read elsewhere, that's increasingly the consensus.
Brandon?
Yeah, Finflexity, I got a two-part question for you. Did you say the other day that you voted your shares prior to 2018 for, and your shares after you bought in 2018 against?
No, when it was 2018, I wasn't old enough to actually own shares. But anyways, I voted yes from the limited shares I had. It was a different guy. I don't remember his name personally, but it was not me.
Yoda.
Yeah, I need you to do me a favor. set up a coffee bet for me that Leo is going to flip, and I'm not saying all, but he's going to flip some of the share.
You know,
It doesn't matter.
I actually invited him in here so that we can have a chat. And you know, he said thank you for inviting me, but I hasn't hasn't come in yet. That was only a couple days ago. And Yoda, before I go to Omar, what makes you say he will switch some of his shares back to 4?
Yeah, I think when he declared that he was voting no, he probably didn't anticipate the groundswell movement that's happening. Now, I understand at the end of the day, he has roughly 1%, and so it doesn't really matter. But what I'm trying to say is he is much like a political, election. He's kind of reading what the sentiment is, and at some point, he has to say which side of the legacy of this outcome does he want to be on. Does he want to be the guy who ends up on the losing side potentially? I'm not saying that's 100%, but potentially. Or does he want to be the guy who flipped last minute and act like the hero that he wants to be? That it was because of my shares that we, reluctantly but tipped the scale over. And so Elon should forever be indebted to me. That is the kind of the psyche that I'm kind of reading into this guy. He posted his picture at Shanghai as if he was a fan of Tesla. But anyway, it's just my hunch that he's gonna flip on some of his shares just to make a point.
Okay. Michael, do you want to take the other side of that bet?
Yeah, I think if he has any regrets about his vote, he'll just get into his KQID time machine. So I don't think he's gonna I think he's gonna stick with his guns and then time machine it if it doesn't work out.
Interesting. Omar, what do you think?
I don't think Leo is going to change his vote. This guy was buying call options in October 2021. The butt hurt he got from buying those options is more than any convincing can do. Okay. He's going to vote no. Now, unless you think the vote is going to be literally 51 to 50, 51 to 49, his vote's not going to make a difference. It's less than 1%. So people are focusing on, oh, okay, what's Leo Koguan going to do? Or what's this guy going to do? Each individual person obviously has a small impact. In aggregate, we have a result. So, the decision doesn't change the outcome of the court case necessarily. We can't control what happens in court. But what we can do is just make our voices heard as shareholders and say, we support this. Even understanding all the disclosures, even understanding in the court case that they may not have negotiated as vigorously as maybe they should have to prove fairness. We approve this plan. It's not even about whether Elon deserves it. It's just about compensating our executive. And there's, we can't go into court and argue. Some people did send letters into the court. This is our way to send a message to the court about what we believe. And ultimately, the voice of shareholders is very powerful. They're doing this because a shareholder came and filed a lawsuit and said, I'm opposed to this. If the overwhelming majority of shareholders say, look, we actually want to incentivize it, as much as we understand some of the flaws in this process and package, we would like to keep this in place. I think that is going to have a powerful sway in court.
All right. I put the bet at the top. If you guys could please confirm that you agree to this bet, I would appreciate it. ESG, sorry, Bill Bob Joe.
Yeah, just wanted to respond to the Grant sentiment that the vote doesn't matter because he probably won't get paid regardless. I somewhat agree with that. I think even if the vote passes, there's a good chance he will not receive this compensation. But that doesn't mean the vote doesn't matter. You know, most people who are bulls believe that in order for Tesla to achieve its highest form of success, you know, Elon Musk's leadership is required. And so for him to know that he has the support of his shareholders is important, even if he doesn't end up getting this compensation. So that's my take on it.
Okay, and Omar replied to the bet and said he's on the no side, meaning with Michael Climate Yupa, that Leo Kogwan won't change his vote from against to for proposal 4.
And
Elon's
going to the Shanghai Tesla store and being a fan has nothing to do with it. He wouldn't buy billions of dollars of shares if he wasn't at least somewhat of a fan. But I think he feels very, personally slighted by Elon. He feels like I lost all this money and I don't want Elon to get this compensation package now.
ESG and then Michael.
Yeah, so I actually agree quite a bit with Omar and Yaman kind of on the kind of intangibles part of this. First of all, if you're a long shareholder of this company, given that it trades at such a premium using kind of conventional valuation metrics, and you don't vote for this package, this is kind of to your point, Yaman. It's like, well, why the fuck are you long? I think is a really powerful point. And if I were a long shareholder, I'm either long or short right now. I think you would be insane to not vote yes. So I think that is a really important point. And then to Omar's point, there's a lot of really smart legal people that follow the law really closely, and they talk about, Kathleen McCormick has a really good record, and she's really spot on the law. And I think people kind of, acting like she's like an activist or whatever, kind of misses the point. And this is kind of getting to Omar's point, is that we have to admit that courts ultimately they talk with the law, but there's always a flexibility involved. And to pretend like it's not a political institution is foolish. So if a lot of shareholders come out and vote kind of overwhelmingly for it again, even if the kind of law doesn't change, and even if McCormick is, kind of stubborn on her interpretation of it, to pretend like it's not ultimately a political body and that there isn't some, mechanisms to keep corporations in Delaware, that I think that is probably, if you're talking about it from like an activist standpoint, as like kind of a group of retail shareholders, I do think that is important.
Okay.
So I agree with that. And the other thing I want to point out is that the retail shareholders, right? So on Twitter and on online discussion boards, I'm like genuinely curious as to what percentage of the people that follow Elon Musk tweets, that pay attention to this stuff, that are super involved with it. Like, I wonder what percentage of the people of the retail shareholder base, all y'all kind of represent, versus the kind of passive, well, this is the next Apple and it's just going in my Fidelity account, I'm not going to think about it on a regular basis. Because I think that ultimately is going to be the difference as to whether this passes, is how concentrated are people like you folks in this space that are super into it versus kind of your
Dude,
passive retailer. But I'll shut up now.
Thank you. The one thing that people should note is that there's a core group of Tesla investors who've been with Elon and Tesla for a very long time. Like, we're talking pre-IPO.
Your Bill Lees of the world.
And they don't come to speaker board here. Okay. They may be in the space, who knows? I don't know. They may hop in every now and then. I'm sure they keep an eye on discussions and everything, whether here or outside on Twitter, X, whatever. But they're behind the scenes. Like, if you look at the people who, I don't want to go into details, but there's a core group of people who are just very supportive of Elon and the mission. They don't care as much about the stock price. They just want to make sure that Tesla succeeds. And I think people really underestimate that silent majority.
And they're the ones with the votes. I mean, Tesla's
Exactly.
minted many millionaires, many people who literally made millions of dollars off a Tesla investment that was much smaller than that.
exactly right. Michael.
Yeah, I wanted to respond. I forgot who made the point, whether it was Grant or one of the other bears on the speaker board. But the point was that, the legally speaking, even if the vote passes, that it's unlikely that he will actually be compensated. And I wanted to respond to that by saying uh, it doesn't. I think the game here is not bringing it back to Judge McCormick. She might shoot it down, of course, but the real game here is like on appeal. And Delaware wants to protect their image of being pro shareholder rights, and it's not going to be a really good look for them if they overrule something that was approved by shareholders twice.
They don't rule on what's a good look. They rule on the law.
But there's a political aspect, like ESG was talking about, and the law is ambiguous usually, and there's room to wiggle always.
Grant.
Yeah, what's interesting to me is I think we agree. Like, I actually fully take ESG Hound's point and your point that there is wiggle, and that as much as we like to think that these are black and white, legal institutions just reading the law and nothing else, there's some wiggle there. They are responsive to the, public opinion, all that sort of thing. I think that this particular one is kind of challenging because they're still operating inside of a legal construct. And with this one specifically, this particular mechanism, I don't know, like the code or the regulation, whatever it is, I'm not a lawyer. It's just not really possible, is my understanding, to use that particular, approach to get this sort of thing with this level of scale to it changed. Like, that's kind of a legal precedent of sorts. It's designed for really small marginal tweaks to plans. I think if they can't get it through there, then they can't just go back and say, hey, can we approve this plan where we pay them based on these targets that they already hit 3 years ago? Like, I just don't know that that can happen. Maybe there's a way to give him some additional stock, but I don't know that it's really jamming this existing plan through the court. I just don't know how that's going to work.
Is there a rotary phone in the background?
It's the door at my co-op here.
Oh, okay. ESG?
Yeah, I think that the law is probably generally pretty restrictive. But I think to Michael's point, I think Michael's the one that brought up that the Chancery in Delaware is like shareholder friendly. I don't actually think that that's entirely true. I think they tend to be more management friendly in a lot of ways. Most of the law is set up to kind of, by default defer to management, but also like protecting some core shareholder rights. But I think even beyond that, and I do think that there's a political component, is that Delaware exists so that there's a safe place that people can go to. And a lot of that has to do with kind of like your M&A transactions, which is why there were a lot of bears that were like, oh, Musk is going to win this Twitter case because he always wins or whatever. And it's like, no, they exist to like smoothly have transactions that people can rely on over long periods of time. And so I guess I agree with both sides, because I made the argument earlier that there is like a political component, and if the vote was overwhelming, that may change the outcome. But their ability to kind of facilitate long-term business arrangements between different businesses, and when you talk about shareholder rights, you're talking about like your investment banks like Goldman and
Thank
stuff.
you.
So yeah, I think that's just like a really important dynamic to remember.
Okay. Two verbos.
Yeah, I think what Delaware really has that people love is a huge body of case law. So pretty much every kind of business dispute you've seen, they've got case law, and you can be sure that they're probably going to rule with precedent if the case comes up again. So it's definitely something that business leaders look at for the Court of Chancery. And, Delaware is this tiny little state. They've got a great thing going, being, the home of mega corporations all around the world. It's a significant part of their tax revenue, obviously. So, I mean, I think obviously they're going to rule on the case itself, but it is kind of an interesting situation when you think about what kind of message this sends in terms of case law. If this is going to be something that other corporations are concerned about, if they're doing stock-based compensation or trying to have some type of equity plan in the same vein.
All right, 20-minute warning. 20 minutes. Happy Friday, everybody. And now we're going to have an after-hour party at Patreon after 20 minutes. I do want to kind of ask Omar about Optimus and FST in a second, but Michael, let's get your thoughts real quick.
Yeah, judges and legal analysts routinely say that one of the most difficult things about their jobs is deciding the sentencing and the remedies after a case is resolved. So even if the law is very clear and Tesla board didn't do its job, that does not mean that the remedy is very clear cut and obvious of rescinding the entire package. It could be an alternate remedy, and that could come up in the appeals process.
Okay, very good. Thank you. Michael, do you have any experience with legal matters?
So no, I'm not a lawyer, so I want to caveat that. I just watch a lot of legal analysts.
Just in general, or oh, interesting, like Law and Order?
No. It was more arose from like when I was following politics, and I wanted to try and to understand the cases better, and I was trying to find non-partisan kind of like legal analyst experts, and I kind of listened to them more and more.
Did you ever consider law school, like LSATs and stuff?
No, but I have a few friends who have gone through law school.
Gotcha. Okay, cool. Yeah. All right. So Omar says, looks like we might not see FSD 12.4 in May. All right. I mean, is the last day. Do you think it's going to come this weekend, Omar? Any rumors, thoughts?
It could, and it should. I would expect maybe an 11.4.1 at this point. I was kind of trying to coax a comment out of Elon or someone on the team by saying that. But yeah, hopefully we get some good news this weekend. If we saw an 11.4.1 go out to employees, then that would be a good sign that we could see it go out to the first customers later, maybe Saturday, Sunday, Monday, something like that, depending on when it goes out. And it'll probably take several more weeks to roll out throughout the fleet. But once the first customers get it, we can really start taking a look at what's inside.
Okay. Any new thoughts on Trump being found guilty?
Yeah, it's an interesting situation. I think he is guilty of the crime that they charged him with, but I also think it's a little bit trivial. I think he kind of paid some hush money, and instead of writing hush money for porn star, he wrote, legal retainer, So it's kind of like a relatively minor offense, I think, in the grand scheme of things. I don't think it's necessarily something that voters are going to say, oh, this is something that really offends me. Unless you already hated him, then, you're going to be dancing on his grave here. I don't think there'll be a prison sentence. And I think that it'll be interesting to see how it impacts the polls. It could hurt him in the polls, or it could actually backfire and give him more support. I think, generally in the United States, and, you can argue about whether this is a good assessment or not, but a lot of people are starting to look at it from this lens. In the United States, we have something very powerful. We disagree respectfully when it comes to politics. In other countries, you take your political opponent, you kill them, you put them in jail, you do all kinds of stuff to make sure that you stay in power. Here we have an election, and when people lose, they actually give power to the other side. And they don't try and like send opponents to jail. Like that's what happens in Russia, right? Navalny came and they sent his opponent to jail. So I kind of worry about the precedent it's setting. Maybe you could say it's kind of warranted here, but other people I think in the future are probably going to want to send their political opponents to prison. And I think generally we should let the electorate decide, rather than, sending a candidate to jail or something like that. So it's definitely an interesting story. It's unprecedented, but I'm not sure it really will change the outcome of the election all that much. We'll see.
Finflexity, and I'm Brandon.
Yes. So like Uma was talking about the polls. So I think that 2 or 3 before the verdict came in, and they were saying that if the verdict were to go yes, many people viewed it as political martyrdom. Hence, his numbers in the polls would rise in swing states, particularly between the median, which is median voters. So essentially, he'll probably do better, and his donation website crashed about 2 times last night. Yeah.
Brandon.
Hey, there's very much that can be said about this topic, but I'll just say this. There's, in my opinion, a 99.9% chance that they at least try to send Trump to jail, this specific judge. There's pretty much no way they would have gone through with all of this, in my opinion, a show trial, unless he was going to send him to jail. I mean, you have to go all the way. If you're going to do this, it's what they want.
Michael, then Jimmy.
Yeah, so I just wanted to say that I want to Finflexity, if you could post where you saw that his poll numbers would go up after if he was convicted. I'm curious to see the source for that, because the sources that I've seen, there's 538. They wrote an article about it, and basically all the polls were showing actually that there was concern if he was convicted, and some are considering would consider changing their vote, but very few would actually said that they would change their vote, and it was mostly negative, like it would have a negative impact, but that there was some nuance and caveats that people were kind of just saying things to virtue signal. But it's interesting. So I'd like to see your sources on it.
Yeah, I didn't read the poll itself or the survey itself. I had just read Bloomberg yesterday. So Bloomberg said the same thing. And about a month ago, I had an article on WSJ. I'll try to link both of them, but Bloomberg one I'll definitely link below.
Well, I mean, we're going to find out. I mean, there's a lot of polling done almost every day now. So we're coming into the hot season. It really is in June when
This
things
was
start
the start
heating
of
up.
the election, I feel like. This was the
Yeah.
first event that really kicked it off.
Yeah, exactly. Man, I was looking at some Google Trends search results from the last 3 years. From the last 3 years, I've been looking at the search results and everything. Google Trends analysis. 2020. I mean, in the 2016 election, Trump was, for like 2 years heading into election, he was in the news. And then 2020, it was also very hotly debated all throughout 2020, from the beginning, from late 2019, really, it was in the headlines. Today, it's like there's nothing. No one's even talking about this election anymore. I mean, Elon Musk is searched just as much as Biden and Trump right now, which
I
is
think
really
after the
amazing.
last few elections, Americans have just gotten tired of politics. They just don't want to follow it anymore.
Yeah, exactly. I think that may change in June, though. Let's see what happens from here on out. I'm really curious to see what's going to happen in the months leading up to the election. Jimmy?
Yeah, my opinion is that it's a sham trial and they don't actually have a charge against Trump because they never actually brought that. My main concern out of all of this is, what does this do for the EV market? Because there has been a couple quotes by Trump within the past couple weeks that said he would end EV subsidies if he's elected president, and that he will support big oil and get them back up and running, and that there won't be essentially the subsidies for EVs. And that kind of, I don't know. I don't know what that does for America and the auto and the EV industry. Do these bigger companies start going to a hybrid standard with gas and electric? Does it really hurt Tesla?
Will there be profitability? And then what does it do with China companies such as BYD, and how will tariffs look?
Omar?
The dominance of EVs is inevitable, really due to the long-term cost declines of battery technology, while the cost of ICE is increasing. So subsidies can make it go a little bit faster, but it's neither here nor there. I consider the trade-off between Trump and Biden to be neutral for EVs. Both have sort of positives and negatives to them in terms of their impact on Tesla. So I consider it a wash. Vote with your conscience. And I don't think it really matters if the IRA EV credit exists or doesn't long term.
Okay, 8-minute warning. 8 minutes. I will cut people in this mid-sentence. Michael.
I just wanted to add a quick data point that the betting markets actually spiked for Biden when the verdict was announced, and then they normalized back to what they were before, which is interesting. And then as for the EV market ex IRA credits, I think that'll be a significant hit on net, but also Biden has shown to be kind of negative for the largest EV maker in the US. So I still think that Trump would be worse for the EV market than Biden, but they both have negatives.
Okay, good.
Trump will help us approve robo-taxis easier than Biden.
Yeah, I was thinking along those lines as well. Yeah, we should dig into this a little bit more. How each candidate's politics relate to Tesla in future episodes. Michael, thank you very much for your contributions today. You've been great source of data, facts, good thought. I love it. Finflexity and then Nick.
Yeah, I just found the figure. Apparently, Trump raised about 37 million over the last 24 hours after the verdict was announced. This is the fact.
Nick.
It was 39.
Yeah, that's what I thought was hilarious. Both candidates are fundraising based off of this, right? So the Democrats are going, "Hey, we indicted him. Give us some money." Trump's going, "Oh, I got convicted. Give me some money." It's like,
Yeah,
huh?
and since we're on the topic, so also true. Into a few his other rallies that he
Yeah,
had.
Nick.
Um,
Your connection is really bad. Claude.
Yeah, thank you. This is my first time using X and being on one of these live. So I hope you can hear me and that I'm not messing
One
this up.
sentence. What's your question? What's your question? One sentence.
Oh, I'm sorry. It wasn't a question. I was going to make a comment related to this trial in context of this phone call. I've heard folks say that guilty and not guilty. I don't have an opinion one way or another. But in the context of this, the whole call, the predicate for this call was a lawsuit in Delaware that's made this next conversation, this next vote imperative enough that you've created this phone call. When you author a judicial system to change the length of time or that you can be charged with something, that alters a judicial system. And I know we said it was not necessarily political, the position that Tesla finds itself in. Now, I just wanted to make a comment related to that. That I think that the underlying notion of
Okay,
who's
Claude,
president versus
thank you.
not.
Sorry. First time speakers are limited to asking questions in 10 words or less. John Lee.
Yeah, with regard to the two candidates and EVs, I agree generally with Omar that in the long run it will make a difference. But I invested in Tesla, because of concerns over climate change, and the speed at which we get there is important. And I think that Trump would be bad for the transition to renewable energy, and Biden would be good. I'm not thrilled with Biden's interaction with Tesla, but that's just an unfortunate thing that's going on.
Omar, is Elon going to hold this Twitter space, X space with Trump? Is that what I saw today?
It sounds like it. I just saw that too when I got back home.
Yeah. Interesting. I think that's part of the reason. That's part of the reason I think that we're not hearing a lot of election talk, because he's not on X. He's missing out
True.
on all the activity. All right.
Yeah, that'll be good for the platform for sure. That's sure to bring in views and advertisers.
Yeah.
Elon
I
wants
know
to
there's a lot of requests to speak, but we have 4 minutes left. Finflex, go ahead.
Yeah, I was just going to say that Elon isn't going to do it. It will be one anchor from News Report. I don't remember the name correctly, and a few other reporters. And people will have a chance to ask the questions on X, and it will be up to the reporters to decide whether they ask it in the town hall or not.
Oh, even better.
Can you repeat what you said?
He said there's going to be reporters moderating, and people on X will get to vote on what the questions are.
Oh, that's great. How are they going to vote?
No, it's not vote. You can comment what you want to ask, and then they will consider whether to ask it or not.
Okay. Okay, gotcha. Wow. That's going to be a hell of an event. Do we know when that is?
Somewhere in June, I don't remember reading it in the article.
Wow. Man, if he does that, I'm guessing Biden is going to have to do the same.
Biden declined already.
Yeah, but there's
Not
all
enough
this
union employees here.
All right. Well, Chris says in live chat, Starship IFT4 next week. I couldn't verify it on SpaceX's X page, but Chris is one of our moderators and has been with us, so I trust. Starship IFT4 next week. All right. F. Osler?
Yeah, I want to understand, are you only taking questions or are you taking comments too?
Well, you had your chance.
That was the
All
question.
right. Exactly. Yeah, first time speakers are limited to asking questions. I know he's not first time, but we're running out of money. So, run out of time. And time is money.
We're out of money too if the shareholder vote doesn't pass.
Yeah. Yeah. Did you get an invite to the shareholder meeting yet, Omar?
No, I don't think any invites have gone out. I would love to be there,
Yeah.
obviously.
Right, so
But
it's
I
not 2
forgot
weeks
to
then.
apply.
Mm.
I got to send in my statement for the tour with Elon and Franz. Maybe I can go if I win that.
Yeah.
They
All
posted
right.
it on the
Yeah.
IR website, actually. Now it's at the top of the IR website. Vote your shares and submit to get a tour.
Okay, good. All right. I'm going to the after party. And it's a 10-20 minute summary of what we discussed here. Maybe touch on a couple of macro points. If there's a company that announced earnings, I kind of read out the headlines. We keep it to 10-20 minutes. And we'll be back tomorrow, and we're going to discuss maybe more. Wait, tomorrow's Saturday. We'll play the weekend by ear. If not, I will see you guys on Monday. Thank you very much, and chat next time.